All right, let's make sure the sound is working great. Oh, welcome guys! 3 likes. We haven't began the live yet. Thank you guys. 3 likes before even starting. That's amazing to see. Thank you guys. Thank you. Let's make sure the audio is working correctly. I know there's some of you guys who tune into the live religiously, so thank you guys so much for that. Okay, I think everything's working pretty well here. You guys should be able to hear my voice in crystal clear audio. Okay, let's begin. So as usual guys, make sure you guys are reading the title of the stream, and most importantly, the actual description box of the live stream. Okay, and so our objectives today, tonight, are to go about kind of looking over the state of the markets and how we're able to catch this 50-50 lotto swing trade on HPE, which was a swing trade idea from this week's CFO Swinger Watch newsletter report. And I want to talk about how, or what actually, we need to be looking out for on the small caps, because I've been increasingly focusing back on the small cap index, and I want to give you guys the reasons why. So with that, let's start off with the markets. Okay, so let's take out shop here. This is a successful mean reversion swing trade. If you guys weren't in this one, well, you guys should be a member, a reader, and a private member of the CFO Discord to gain access to all those swing trades that I sent out and alerted. So make sure you guys DM me on Instagram to gain your first 50% off for your first 30 days. All right, so let's make sure we're good here still with the latency and okay, perfect. So first of all, let's take out all of our indications here. So on the weekly time frame for SPY, okay, we are currently still in a inside range compared to the previous week's wide price range, and that's good to see, because right now we have practically nothing that important going on. We had some data today, but we have most of the full force of important data coming out on Friday, and so it would be great if the markets don't do anything again, because if you guys remember from the past 2 weeks, we're able to focus on individual names and tickers so that we're able to swing trade without the worry about what the market is doing, because again, the market's volatility has dropped off so off the cliff from its highs that we saw earlier this year. There really is no reason to be looking at the price volatility and the price contraction. Now obviously, as we're heading into more economic data and as we're heading into the next FOMC meeting, it would be wise to think that the volatility will expand, right? We'll see an expansion of vol in the next few weeks. So that's something to worry about in the next few weeks. You don't have to worry about that now. But hey, welcome guys, welcome. Let's see if we can get to 10 likes tonight. Welcome guys. So, you know, in this case here for us right now, if you go back in the daily time frame here, we can clearly see that the markets are flagging. All right, and if I bring back my thing here, so oops, I don't know why this has been moved, but as you guys should know by now, we have this new range at the all-time high range here from 532 to 524. And so, hey, what's up, guys? Awesome, 6 likes. Let's go. Let's get to 10, guys. Let's get to 10. Welcome, everyone. I see everyone's joining in now. Welcome, guys. Welcome. I know it's a little bit late in the East Coast, but welcome, guys. Thank you guys for joining in. The S&P 500 has this new range, 532 to 524, which means there are clear levels that the market will respect, and there's a possibility that we can see a continuation of specific range trading in between these two major upper and lower levels. Again, 532 to 524. And so far, right now, after having a very large push below 524 and then a large pivot thereafter, which clearly indicates that buyers are still wanting to have the price stay under the all-time high areas underneath 532 to 524, or excuse me, above 524. We're clearly getting some good buying coming in. However, you just need to really watch out for any type of weakness that does get introduced into the markets, like what we saw yesterday. But again, buyers are still there waiting at 524 to buy the price back up higher. So pretty much, I mean, the market levels right now are very, very simple. You guys shouldn't have any trouble really just focusing on where the market could be potentially heading to. Right now, all the I guess pointers that the markets are telling us is that it wants to go up, right? It wants to go up, and it wants to retest 532 and possibly reject down, or make a simple higher high and a new all-time high level. Because currently the new all-time high is at 533.07, and that's all we need to do. Just break over 533.07 and we have a new all-time high. Very, very simple. So if any one of you guys are trading the indices, and specifically the S&P 500, you guys should not be having trouble right now, because the low volatility and also the fact that the prices are really just respecting and adhering to all the major levels on the daily time frame. All right, and again, there's only two major levels, 532 and 524. And this 528 level that I've kind of, or 528.50 level that I've drawn here, it's more of an intraday, kind of the hourly time frame, so you don't really need to worry about that. But again, you guys can use that if you want. We respected it today as well, this 528.50. But anyways, that's pretty much it for the markets. Now I want to pivot to the next point here that I want to talk about, HPE. Okay, hey, Mr. Pudding, what's up? Thank you. Yeah, I mean, it's a very nice analysis, not just because the fact that it's you know, it's based on my experience, but because I'm keeping it simple. Right, I think that's the point that people really need to take home tonight, is that my analysis works because it's simple. It's based on all of the fundamental basics of technical analysis, and I've been saying that for years. And again, people don't need to worry about all these different quote-unquote advanced way of trading or strategies or anything like that. Just focus on the basics and you will do well. Right, obviously there's nuances to that, but yeah, simple is a good word. It definitely feels easy to follow your wording and explanation. Yes, and I believe, if I'm not mistaken, you're still a reader, Mr. Pudding, of the report. So I'm pretty sure you're a subscriber, if I'm not mistaken. But yeah, you're welcome, man. I truly appreciate your own words on kind of seeing what I'm doing here with technical analysis and just the overall style of swing trading or even day trading as well. So that's kind of it for SPY. I want to talk about HPE now. So first of all, before I even get into this, I want to give you guys a sneak peek at the CFO Swinger Watch report from this week. Okay, let me just scroll all the way back down. So 16 pages of goodness this week, or goodies. So right here. So HPE, or Hewlett-Packard Enterprise Co. I probably butchered their name, but this is what I said. I'll be brief about this one since this will most likely just be a watch list name where a position will not be taken this week, but obviously that changed on Monday. And so what I clearly said here is that from a purely technical angle, the stock has been making a very nice macro-based chart pattern. So what I saw here in HPE on the weekly or even just on the monthly, right? So I'm gonna go over this. So make sure you guys are paying attention really well here, right? As the reason why this lotto even worked out, and because there was a 50% chance that it wasn't going to work out. All right, so that's something that you guys should consider, right? Earnings plays are complete lotto, so 50-50 probability, and that's not something that you guys should be excited about at all. Okay, so HP, very, very large base, multi-year base from 2021 to 2024 this year. But if you go all the way back to near the IPO years, and also back in 2018, this stock has been stuck in between a range of 13.50 to 19 since 2018. I mean, that's a long time. And if we did not have that black swan event on 2020, this still would have been stuck between 13.50 and 19. So at some point, this stock was yearning for a breakout to the upside because it's been stuck in between this range forever. Again, if we did not have that fluke in 2020, this would have been stuck between 13.50 and 19. Now, you guys might be asking, Andrew, how would you even know that, right? Well, the evidence is here, right? The past 3+ years, even after the COVID bump to the downside and rise to the top, it hasn't been able to break out of this huge macro flat base. And so this 13.50 and 19 levels are definitely something that you guys should, hey, hello, welcome. Then you got, 7 likes. Hey, welcome guys, welcome. So for everyone who's joining in now, make sure you guys watch the recording as I've always said in previous streams. Okay, so make sure you guys are watching my recording or recordings for every single stream. Okay, so now based on this macro perspective from a technical angle, all right, this is what I said as well. Okay, so to everyone who's just joining in now, or who is just joining in, I'm giving you guys a sneak peek to the CFO Swinger Watch report that I send out every single Sunday night. So if you guys want to become a reader and also plus on the side a private member of the CFO Discord community, make sure you guys DM me at ChartsFocus1 on Instagram because there will be a 50% off discount code waiting for you guys for your first 30 days. Okay, so make sure you guys take up that offer. Now, this is what I said as well here. Hey, what's up, Hugo? What's up? So, this is what I said. Some of these peers, right, are HPQ, DELL, and LOGI, and this is what I said. What's particularly interesting about this stock is that it's in a group that's currently / recently has peers rocketing higher thanks to their own respective earnings reports or their better conditions / reasons for staying in a strong uptrend. And so all of these 3 names that I just mentioned to you guys, right, and to my readers on Sunday night, have clearly had some stellar quarterly results. And so in my head, and this probably isn't an original thought, I'm pretty sure other people have thought of this as well, the countless of thousands of other traders, that, not Dell, right? Dell, for example, had a huge run up the past couple of months thanks to its really good earnings report, right? And it's also in the same group and same kind of sector and industry as HPE, and HPQ is also in a similar business as well, similar industry. And this one has also had a pretty great report and reaction to its earnings report. And so to me, this seemed pretty simple, right? From a 50 to 50 probability, I felt like HPE just had some pretty good odds stacked onto onto its incoming and upcoming earnings. Excuse me. So that's the reason why I changed my stance from what I said earlier here. Right? I said this is going to be a watch list name. It's not going to be something that I'll be taking a position this week, most likely. But on Monday, I decided to change that because I just felt a bit convinced that this could potentially be a reason to want to be having a lotto. And so I grabbed 2 contracts, and this is what I said here. Okay, so this is the contract that I bought, the 19 strike call contracts that expire on August 16th. Right? And again, if you guys didn't know, I provide all the option contracts that you guys want to be looking at to execute on for that specific swing trade idea in the report. Plus, I give you guys the long entry or whatever, maybe it might be a short entry point, the stop loss and profit targets. I give you guys a 3-point game plan along with the option contracts that you guys want to be looking at. So it's a pretty much a top to bottom thorough rundown of each single swing trade idea every single Sunday night. And on top of that, I give you guys a technical analysis video too. So really it's just pretty much a thorough report that you guys can get every single week if you guys don't have the time to research, or if you guys don't have enough, just energy to be doing all the hours and hours of research that I put into this report. So, HPE here definitely just paid off again, thanks to what I was seeing throughout the entire industry and this overall business model based on the other companies. And it was a gamble, right? It's a lotto. That's what we call it, a earnings lotto. It's clearly an earnings lotto when your odds are 50-50. And so I was able to grab 2 of these 2 contracts, this specific strike call contracts, and depending on how we open up tomorrow, it'll be up pretty nicely. It'll be in the money, obviously, since I think after hours, HPE ended up closing right underneath 20.50. So it's massively in the money. That's about so it's over 50%, 15% after hours. That's a huge move, okay? So again, it was able to break out that large base on the weekly time frame. So the technicals lined up, and the overall kind of it's not really a fundamental reason, but a reason for to kind of apply to the bullish look from the technical analysis is the fact that its other peers or competitors had some really good earnings, right? And so you're kind of expecting a similar or related business company to have similar earnings results as those other 3 companies had as well, right? HPQ, DELL, and LOGI. Does that make sense, guys? Right? So again, I'm in no way justifying gambling through earnings, but this was my own reasoning as the reason why I changed my stance on Sunday night to Monday morning. Okay, and I was just fully convinced of trying to ride this one into earnings today or after hours tonight, and thankfully I was correct. And so I had all of that reasoning behind, but remember, I would say 99% of it was luck. Why? Because the probability of this hitting was 50-50. So 99% was luck, and that 1% was all my research that I did. Okay? And obviously I packed it up into simple terms that everyone can understand in the CFO Swinger Watch newsletter report. Okay? So just like how Mr. Pudding said here on the live chat room, guys, if you guys see it, right? Simple is a good word. It definitely feels easy to follow your wording and explanation, and I really appreciate that, right? Because that's exactly what I'm doing here. Okay? So HP, definitely a great trade. I will update you guys on how that looks tomorrow morning. And last but not least, let's go over small caps. So the Russell 2000 ETF index is looking very bearish, and today we actually got an increase in selling, and there are some very large sell orders coming in as well from the institutional side, with people selling on small caps. And what's interesting about this is that I am kind of surprised that small caps are falling behind here, as the market, the overall market, so basically the S&P 500, has been doing nothing except bouncing. And the reason why I say that is that bonds. Okay, the bonds market has been recovering very well. So specific bonds that we look at are the 20+ year Treasury bond ETF or the 3 to 7+ year Treasury bond ETF or IEI. Okay, or excuse me, 3 to 7 year Treasury bond ETF. And so all of these have been rising to the upside. I've been in TLT for some time now. Okay, so this one has been treating me well too. But on the backdrop of bond prices moving up, that also means on the other side, bond yields are going down, right? And so there's some very strange action going on in the small cap index and even the mid caps. Because if bond yields are going down, that means we're about to see a better market environment for small caps, and not just in the stock market itself, but for the overall small cap public companies, right? Their business can do a lot better if overall interest rates go down. And so it was very surprising to see, especially small cap biotech companies being absolutely slaughtered today for no reason. And it was pretty interesting to see the bond yields absolutely getting crushed to the downside, and at the same time, IWM also getting crushed to the downside, including today. So to me, this feels like we need to be really hawking IWM here, because at some point, I feel like this is just a simple manipulation, simple washout from the market makers who are intentionally selling this so that they can grab it at a lot cheaper price. Maybe right now they think it's at a premium, and they need to bring it back down to a quote-unquote fair value in their own eyes, obviously. And to me, I think that they'll probably start taking in more of their current or a new position on IWM around this $200 whole number level. However, if that is indeed not the case, if we do see a breakage of the $200 level on the weekly here, okay, there is a chance that we can revisit the weekly 200 SMA as we've been seeing since, well, this year and last year as well. So again, we pivoted multiple times at this weekly 200 SMA. Okay, we did it multiple times here. And earlier this year, we did it twice, right? So there is a slight possibility that we can be seeing a break below the psychological $200 level, and we can push down further until we reach that weekly 200, and possibly and hopefully that will be the last time that we revisit this weekly 200 as we rocket away because of the fact that we're seeing rates top out. And again, that's great news for small cap companies. Okay, small cap public companies. They're in a lot easier position to really leverage their business and continue to survive as a business. So IWM, I think you guys need to be watching this one for the next couple of weeks. I believe there will be a pivot coming in very, very soon, most likely into the end of Q2. And for options, if any of you guys are interested in options for IWM, I would highly recommend you guys look at this specific strike. Okay, so let me give you guys the options chain here. All right, let me bring this over. So I want you guys to look at, I want you guys to have a lot of time, right? So if you guys aren't able to pay the premium for the safety of the time that you get from these further out expiration dates, then try to go for at least 3 months out. But I want you guys to look at the January 2025, okay, January 17th, so next year. And I specifically want you guys to take a look at the 220. Okay, so first of all, 220. What is clearly shown here, guys? The OI, right? The open interest is massive. So it's a very liquid strike call contract. So that's great. But the 220 strike is very, very interesting to me. Why? Because as I've been preaching at this point, there is a very nice chance, a high probable chance, that once rates top off, we can see IWM heading back to the previous all-time high area that we saw in 2021 to late 2021, right? So around it wasn't really early 2021, but I would say early 2021 to late 2021. But we were stuck right here in between 226.50 to around 233, and I'm being a bit conservative here at this point, but I truly believe if we're able to see rates top out, small caps can have a rocket attached to its price and continue to move up higher until we hit 226.50. Now, I think it's too liberal to be thinking about 233 right now, but I think it's conservative to be thinking about 226.50 as a major target if we do see small caps taking off, right? And so even from a monthly time frame, guys, I mean, if we get a nice inside monthly candlestick, perfect. That'll be absolutely perfect, since that'll be setting us up into quarter 3. And as I've said a couple minutes ago, that I personally think that IWM is setting up for a pivot around late quarter 2 and into the end of quarter 2. So if we're able to see a nice end to the month of June, where we have a nice inside month, where we're inside the previous month's range, right? So the May candlestick here, the month of May, we should be able to see a nice squeeze to the upside as we head into the 3rd official quarter of this year, right? And so that is where kind of my long-term perspective and macro perspective, based on the overall macro factors as well, comes in. Now, obviously, this 220 strike call contract is a bit expensive relative to your own personal account sizes, but I am willing to take at least a starter sometime in, transition between late quarter 2 to early quarter 3. And I will continuously update you guys once I do execute on this specific contract. But yes, make sure you guys watch this specific strike and this specific expiration date, January 17th, 2025. All right. So that is it for tonight, guys. I know that felt a little bit quicker than usual, but we are nearing the 30-minute mark. Hopefully this live stream was very, informative, and most importantly, applicable. That's my main objective on every single Tuesday and Thursdays live. All right. And that's something that I truly want to preach, because again, I keep my words simple, right? No, you guys don't want it to end? But hey, thank you guys so much for all those likes here. Very, very nice. More info I'll provide it to you guys in the report, as always, and in the private CFO Discord. So to anyone who is not a member yet, or even for the current members right now, if you guys are wanting for if you guys know anyone that is needing help in the stock market, or just needs simple, great swing trade ideas, make sure you guys let them know about this 50% off opportunity for 30 days. Okay? Of course, you're welcome, guys. You're welcome. Right, so that is it for tonight, guys. I will see you guys on Thursday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Thank you guys so much for liking, commenting, and just overall just watching the entire live stream. And again, I really thank you guys for all the support that you guys have been giving me on this channel. All right, so good night and good luck tomorrow.